Welcome, everybody. Welcome to RSM's latest Think Big series. This one is titled Advisory Boards. Take your business to the next level. Before we do begin, we'd just like to do a welcome to country, if we can. We acknowledge the traditional owners of the land and waterways on which we gather today, and pay our respects to elders past, present, and emerging. Thank you. Again, welcome everybody. The purpose of this webinar is to help our small and medium enterprise businesses, clients, non-clients, and give them information in relation to the strategic value of advisory boards, address common hesitations, and position us as a trusted advisor in this space to demonstrate how we can help your business take it to the next level. With me today is a group of partners from our business advisory practice from around the country. Andy Graham, who's a partner in Brisbane, Jason Hennessy, who's a partner in Fremantle, Pat Flanagan, who's from Sydney, and Will Laird from Toowoomba. So a nice mix and a nice spread of people from all around the country, be it metro and also regional. And we're grateful to have them with us today. The report has been released about 2 weeks ago and is available on our website and also through our normal social media channels, and has also been sent out to subscribers of our Think Big series. So we encourage you to take a look and engage with the content. I thought let's start off with the agenda. So what we'll be looking at today is why would a business need an advisory board? Discuss some of the biggest misconceptions with advisory boards. Sometimes it can seem like a very corporate thing to do for our small and medium enterprises. The timing and the fit, when's the right time? Choosing the right model. It's not just a top ASX top 200 board that you need to implement. It can be custom and tailored to suit your business. And lessons and insights from our expert panel on what they've observed in real life and in real practice. Also, too, we encourage you as much as possible to send through your questions, and we'll do our very best to ensure that we answer those as we go along the way. Hopefully, we can cover those as we go through the session. So, let's start with the basics. Why would a business need an advisory board? And Andy Graham, if I could start with you, Andy, why would a business need an advisory board?
Yeah, good question, Jay. So look, my observations are that most businesses have got where they are today because of the skills, the experience, the expertise of the owners, of the founders. Sometimes to take the business to the next level, whether that's growth or whether that's expansion, maybe a different set of skills or experience or expertise is required to assist and support the business to do that. And that's where advisory boards come into play. So it can be value in a lot of areas. Primarily, we see sort of that independent, objective advice helping owners see some blind spots, which they might not see themselves, or maybe test some ideas. I think it also brings a broader capability to the table. So skills, complementary, and sometimes just different skills which the owners may not have. The other thing is probably also just the structure of governance. So it provides the business with the ability to sort of strengthen its decision-making around a risk-based approach. Sometimes there's things which the business owners don't see. So there's a number of sort of areas where I think advisory boards provide real value to business owners, whether they're going for growth, whatever they're doing around those sorts of facets.
Thanks, Andy. That's really insightful. If I can now to Jason over in Fremantle. Jason, what do you think some of the biggest misconceptions about advisory boards are that you hear when you talk to business owners?
Thanks, Jace. Well, probably the first one that jumps off the page is cost, and maybe it's going to be prohibitive, but you know, and it's a fair question, right? Because every business is looking to get value from their spend, but you know, especially at the startup phase, the cost need not that be high. Maybe just start with one or two consultants as part of your board. I mean, clearly you're looking for a bit of a return on investment for your spend, but it's ultimately it's about value. So the purpose of the board is to provide those outside thoughts and provide the value, and we ultimately demonstrate that by our role in that. Another
Thanks.
one. Sorry, Jace, is
You're right.
you know that the business owners sometimes think that, well, the outside consultants and don't know the business like they do, and quite rightly, nor should they. Hopefully the business owner knows their business the best, right? But the advisory board members are not there to know the business as well as the owners. They don't need to. Their value is about providing different ideas and experiences that can help the current business owners make better and more informed decisions. Another misconception is lack of time. You know, business owners are busy running the business, you know, getting involved in the business. You know, the beauty of the advisory board is that it can force them to step outside of the day-to-day operations and you know, get that clarity to make better decisions. So you know, we can always challenge the lack of time by starting small, right? It doesn't have to be a half a day event every month, you know, so it can be quarterly or bi-monthly or whatever, you know, so we can get around that barrier to lack of time. And another one is, you know, business owners have ego. They don't necessarily want outsiders telling them what to do. But again, the role of the advisory board is not to be their boss. It's to provide insights and challenge their existing practices that, you know, and we do so in a respectful manner.
Thanks, Jason. I think, you know, one of the things I always observe in this space is that an advisory board, whilst we think it's a very formal thing for a very mature, well set up business, it can be for any stage during the business life cycle, from startup through growth and through to exit and succession. I think you know, that is something that you can tailor it. I think the other thing I take out of this too, sometimes when I talk to businesses in this space, is where do I start? And sometimes that is just the hardest part to do, just to get started. When looking at some of the, you know, in the timing and the fit, Pat, I'd be really interested to hear what you've got to say. You know, when is the right time in a business's journey to be able to consider an advisory board?
Yeah, thanks, Jason. Jason Hennessy made the point, and it is well made, that, you know, it's important really from the beginning. And one of the aphorisms that I'm reminded of is, you know, the Burke and Will story of, you know, they're going out to Central Australia, and the aphorism is, if they had known where they're going, they wouldn't have perished on the way. So the implication is, if you take considered advice from those that have been there before, then there's a better chance you're going to get to your objective. And, you know, there's some caveats around that in terms of industry knowledge potentially, and maybe business scale. So they become important. The other factor that I've seen, and I've seen it acutely, is that often it's the case that the startups that have arguably a greater need as founders, because they're likely to be inexperienced in a business management or leadership sense, and their bench strength often in the management team can be very underweight or constrained. So getting some right-sized input, even from, you know, a very small size business, can be really important. The other point that I'd make, and I've seen this in life writ large, is that the skills and experience you might need at the beginning might not necessarily be the same, and probably won't be as the business grows and evolves, and maybe through the different stages of the life cycle. So that's important. So I think trying to understand what your leadership deficits are at the management team level, the advisory team level, and then backfilling that with the right experience can be pretty important.
Yeah, I think that's an important point you touch on, that during this process, once, particularly those businesses in startup phase, and they do select an advisory board and they do start this journey, that it isn't an evolving one as their business evolves, that, they need to, critically look at, well, is the board that I've got today, what's going to be fit for purpose as I go through my life cycle. I think that's a really important point. Well, interested in your thoughts on, whether these are just for, and we've touched on a little bit as well in terms of Pat, what he was talking about, are they only for the larger, more established businesses, those, in growth and mature, or how does a startup business benefit as well?
Yeah, thanks, Jason. And look, I think as Pat was saying, that all businesses can benefit from an advisory board, but absolutely startups can benefit immensely from advisory boards too. In fact, many successful startups credit their early advisory boards with helping them avoid costly mistakes and validate their strategy and build credibility with investors. So I think that's a sort of emphasis you're trying to get out of an advisory board early on. And one of the things I guess we deal with it, obviously we deal with a lot of startups as we go through, but those new to business will often find themselves searching for the right advice and going from specialist to specialist, trying to piece together information to make a decision. Half the time, they don't even know what is the right question to ask. And I think, they're battling away trying to get there. And amongst all that, they do find that they start to connect with a couple of advisors, whether it be an accountant or a lawyer or some other entrepreneur that they start to feel they can trust. And they might think, if only I could get those couple of people together for an hour, I'd get the clarity I need to actually make some decisions and move forward with confidence. And to me, that's a really good example of how an advisory board can start. You bring those couple of people together, and the benefit is that with the clarity and momentum that the business can move forward with confidence. So I think trying to avoid the pitfalls, trying to lean on people for some counsel is a wonderful thing. I think advisory boards also are a powerful way to move forward from the founder drag. That is where the founder becomes a bottleneck to a more scalable and team-based approach. So I think that's an important piece to think about with startups. They provide a safe space for founders to test ideas and challenge assumptions and access specialist insight. In fact, in our report, we talk about how it might even just be one person they start with as a bit of an advisor, and then branch out from there as the business grows. So I think my takeaway, Jace, for startups is that advisory boards can become a strategic asset with their own return on investment. I think people see them as a bit of a cost, but the reality is I see they save so much in terms of reward and give that reward and benefit at the end of the process. And whether it be formal or informal, they provide mentorship, they open doors, and they help founders scale with confidence. So I think the key is just to get the right people and refine that board as they grow.
And Will, just as a follow up to that, in your experience, and I know you do quite a bit of work in this space, as the businesses move through the startup phase and start to go the growth, and the business matures, how often should those advisory boards in startup phase reassess their boards, their composition, and what that might look like?
Yeah, so I think the composition, I think you should always be reassessing. I think realistically, the owners of the business should be saying, have I got the right people around the table? But I think in terms of frequency of meeting and whether you're getting the effectiveness out of it, I would certainly try to pencil something in, at least every 6 months to ask the question, but probably more every 12 to 18 months to ask the hard questions around, is this going in the direction I need to go? The advisory board does need time to have its effect. So you're not going to have all the answers in the first couple of months, but I think you will know over a period of time whether you're working with the right people.
Thanks, Will. Appreciate that. Looking now, just moving on the timing and the fit and choosing the right model. And Pat, if I can direct this one to you, if I can, as we've talked about, there is no one size fits all. It really is, startups through the growth phase, through exit and succession through to large private family boards and then to corporate boards. Yeah. What type of boards have you seen exist, and how can a business decide which structure is going to suit them the best?
Yeah, good question. Jason and Will both mentioned, the sort of light touch in and then moving through a more structured arrangement, which might sometimes combine formal directorships, and there's some other issues to think about with that. And then, as you evolve in scale and size and needs, I've seen boards where you look at the deficits at, say, leadership level, and you might say, well, okay, we've got some M&A, mergers and acquisitions activity coming up. We need to get, or we might have a liquidity event planned for the founder, so we need to get someone with specialist skills on board to do that. And I've been involved on a couple of those where we did liquidity events, and we brought specific people on, because you can't do a liquidity event overnight. Usually it's 3 to 4 years work to prepare for it. So that's something to think about in terms of identify your skills and then figure out what you're missing. The other mechanism, we do see a lot of them, we at RSM have involvement of the more formalised membership type boards, such as Couragio, the Entrepreneurs Organisation, Young Presidents Organisation, there's a bunch of others. Those member boards are peer-based, and they often have leadership exposure through a diverse range of specialist speakers as part of the membership. And I certainly see benefits in that as well. I've got a number of clients that will have perhaps a private board working with them on their business, but they'll also potentially be a part of a peer-based enrolment. So again, I think flexible approach, understand what your needs are and where you're going to get the critical input that you're after.
I think I take out from that, Pat, there is no one size fits all, and every business is different. Every circumstance is different. What would probably encourage people to do is to make sure that they're talking to a trusted advisor, to find out, picking people's brain, to find out, well, what do you think is going to suit my business in terms of where I'm at, what I'm trying to achieve, as we go forward. So, you're not just an island trying to solve them on your own. You can reach out to people to assist you along the journey, because it really is quite a journey. Will, if I can just come to you, what, in your experience and in your view, what makes an effective board member, and why bringing someone independent into a business? Why do you think that would be valuable? Some of the, from a skill set point of view, that people can bring to the board.
Yeah, Jay. So I think an effective board member, when you think about the sort of attributes you're looking for someone, I'd say that there's someone who listens deeply, they challenge respectfully, and they bring relevant and up-to-date experience. I think those are the sorts of characteristics you're looking for in someone. Someone who did a deal 20 years ago and that might have been their shining light, and that's it. I'm not sure if that's going to help you today necessarily. That they might have some good insights, but I think they really do need to be up to date and very interested and prepared to work with you. Independence is absolutely crucial. They're not caught up in your everyday day-to-day, so they can see the bigger picture and they can ask the tough questions. But independence also brings objectivity. I think that's a critical piece of it. So, which is vital for robust decision making. The best advisors, I'd say, they're curious, they're action orientated and passionate about your mission and the success of the owners, and both in the business and in their life. And I also think, they care enough about you to think about your business when news breaks of an opportunity or to seize a risk to manage. And I think about that. I know my own team around me will probably say, oh, they've dropped everything because Will's gone off to message 4 or 5 people about some news that's happened, because you're thinking about them, you want them to succeed. And I think that's a sort of trait that I think people are looking for with it. So I think the most effective advisory board members are independent. I think they're experienced and committed to your success. They stretch your thinking. They provide honest feedback. I think being able to be candid and honest is really important, and they help you see what others might miss.
Well, there's actually been a question posed on the chat, on the Q&A chat, from Hank, And I'll just read this one out to you. It's sort of similar along the lines of what you've just talked about. So entrepreneurs are often dominant personality. That's how they became successful. How do you avoid entrepreneurs dominating the advisory board to the point where they just tell them what they want to hear and avoid the difficult conversations?
Yeah, and thanks very much, Hank, for the question. So I've worked with plenty of scenarios like that, and it's a really interesting mix. Look, I think the way that I kind of approach it with them is to give them the comfort to say, I think it might have been Pat that mentioned it before, or someone that, at the end of the day, they're the final decision maker. So we're not going to take away from them, the fact that we're there as an advisor, not a decision maker. And I think realistically, if they become too dominant and not prepared to do that, I think the chair selection is really important. That is, that who's going to chair the meetings and make sure that that person, gives adequate time and attention to everyone. But what I also would say is that, again, if someone, Hank or others, know of businesses out there that one day they do want to find an investor or look for a liquidity event in a sale, what investors look for is flexible mindsets. That is, are you prepared to be a team player? Are you prepared to work with things? So I actually think working in that team environment with an advisory board is a great training ground for them to prepare for an exit event.
Thank you, Will. That's very good. If I can just move on to lessons and insights, and then I'll come back. I notice there are a couple more questions in the chat, and we'll come back to those. But lessons and insights, and Andy, if I can come to you, from your experience, what are some of the common pitfalls or mistakes businesses make when they're setting up an advisory board?
Yeah, Jace, really important area. I mean, what I find is that business owners just need to be really clear about their expectations of what they're going to get out of the process of having an advisory board, what's it going to deliver, what goals that they're trying to achieve. So it's not about bringing BHP to a family business or a small cap. It starts with, if you get the people wrong, so it's the wrong people at the table to start off with. That might be that they're from the big end of town and you're a smaller business. It could be that they just don't have the relevant experience given the stage of lifestyle that the business is at, or just what it's trying to achieve. Another important area is just structure. So poor structure or inconsistent cadence. So might have a good first meeting, but then it drifts and it becomes more reactive and managing crises and things like that. I think it's really important too to have a clear mandate on boundaries, so no confusion over roles, so that advisors don't drift into management sort of decisions, and they stick to more strategic and where they can add the most value. So I think they're sort of critical areas for business. And the other one, of course, and we've covered it, is just a resistance to tough advice. So owners sometimes reject blunt recommendations and might stall improvement. So I think you've got to be open to hearing the advice and what it's actually going to deliver and achieve. And I suppose more so in family businesses, what we tend to see is that personal or family issues can sometimes come into the mix, and they can derail the sort of commercial focus of the advisory board. So they're just some, but there's probably many others. But I think the key thing is for people to be really clear on their expectations of what they're expecting to get out of an advisory board, and the value isn't delivered overnight. So it's a commitment of at least 12 plus months to actually see how that's tracking and performing.
Thanks, Andy. And Andy, whilst I've still got you there, I might ask you a question in the chat from Dan. As a bootstrap, sort of similar along this line, as a bootstrap tech startup, we've had interest from a couple of industry experts who are keen to join an advisory board. How do we manage value exchange when we are pre-revenue? So we're very much in the startup phase. Can advisors remain independent while having a minor equity holding in the company in lieu of advisor fees?
Yeah, it's a good question. I mean, certainly my view, personal view, it certainly clouds it. and introduces the potential for a conflict of interest. So it is typical in the startup phase where co-investors or intermediary parties are involved in that process. I think you've got to be really careful though, and clear on what are the boundaries, or put in place some guardrails so that things are managed and you manage the risk of that. So I think once again, it comes back to the individual, but certainly presents some conflict or potential for conflict of interest.
Yeah. Thank you. Thanks, Andy. Jason, if I can just pose another one at you, if I can. What are some of the practical steps or considerations for those thinking about setting up an advisory board? And I know you've been through this with many of your clients.
It's sort of tying in with Andy. I mean, purpose and expectations is top of the list. Won't repeat what Andy said, but then you're looking at the composition of the board, how many that you want, and that'll depend upon your life cycle of the business, and consider the mix of internal team members that you have on the board and external. Make sure you get that mix of experience and expertise that you can complement one another. You're then going to probably consider your timing of meetings, how often, and length. Is it just a short, sharp 60 minutes, 90-minute session, or is it size of business that's going to need half a day? And when it comes to your meetings, you want to ensure you've got clear agenda, and tying in with what Will said, a chair who's going to keep the meeting in order, a voice for everyone, but not overly dominant, and ensuring everyone can contribute. Sort of, again, making sure that there's clear board meeting packs and that everyone's prepared and everyone comes with an attitude to contribute. Have some clear expectations for your board members at the start, and so everyone's got a clear role and they know what they're going to contribute.
Thanks, Jason. And actually, there's a question on the chat I might ask you, because I know for those who have read the Think Big report, there's a case study on a client of yours, Jason, which is a second generation family business. So the question here is, with family businesses reaching the second generation phase, would you recommend the succession stick with the first generation's advisory board, or would you recommend finding your own people?
I suppose the transition of ownership from generation 1 to 2 probably fills in with the advisory board as well, is that there might be a transition. With a bit of luck, the second generation have been brought into the advisory board early. I certainly know in my experience that both generations are on the board, and my role is to ensure that it's a business discussion and family dynamics stay out of it, and there's a voice for everyone. But it's probably a transition, Jace, I think. I think the second generation need to be respectful of those who have been there before, and that includes your advisory board members. But again, first generation needs to respect that there might be different voices that their hearers want to hear themselves.
Yeah. Okay. Thank you. I think that's very wise. Very good advice in terms of people going through this transition from one generation to the next. Sometimes we don't want to upset the particularly in the family businesses, don't want to upset the family dynamics. So, but it is important that everybody is clear and open about what's in the best interest of the family and also in the best interest of the business as well. If I can, Will and Pat, I might ask you both to answer this one if you don't mind. But many businesses out there are probably listening in, and they're thinking wondering whether an advisory board is actually worth it. What's the one thing you want them to take away from this discussion?
Yeah, I'll kick off quickly there, and I'll give you an example of one that I'm involved with. I think Will made the point earlier, I think it was, that you shouldn't wait until you're in a crisis, or it might have been Andy, to take steps to establish or enroll an advisory board, because what happens, and again, this point was made earlier, is that there's a lot of strategy and operational missteps that you can avoid with the right advice and counsel. Of course, the caveat being, you know, you've got to be willing to have the debate and potentially take the advice on board. But what it will do is save a lot of capital. And in the early days of any startup, you know, capital's always really scarce and it can accelerate your growth. Now, a good example is I'm involved with a fellow I've known for 10 years and became friends, and he had a business and it's actually referred to in the report, but we debated certain steps, and, you know, as the founder, and he exercised his right not to take advice, that cost $100,000 out of, you know, a $500,000 cap raise. Now he subsequently sees that, you know, we could have saved that money if he had to listen. The important thing was we had the debate, and so if we hadn't had the debate and then we did take steps to change course, that $100,000 loss would have been actually in the millions, because when he first came to us, he wanted to raise $3 or $4 million, and we said, look, we don't think you need that much. So that's a, you know, tangible example of the process of debating. And Will made the point, you know, you've got to have vigorous discussions. You don't have to take all the advice on, but it's as much about the process that you follow to get the real value from the board. And the value can be in dollar savings, or it could be, as Andy suggested earlier, avoiding a major risk issue that could be catastrophic. So there's lots of different ways to measure the outcome.
Thanks, Pat. Will, your thoughts?
Thanks, Jay. So, look, I think if there's one thing I'd say, it's this, and that is you don't have to do it alone. An advisory board is your strategic partner, it's your sounding board, and it's a catalyst for growth. If I would expand that out a bit, I think I'd say that an advisory board isn't a sign of weakness, nor is it a luxury. It's a smart, practical move that you can transform your business journey, and it's about, you know, gaining clarity, confidence, and a competitive advantage. And that's why we're saying that, you know, the best time to start is now. If you think about around the country, most advisory boards are new. Their businesses are really embracing them. That, you know, there have been some around for many, many years. But as a broad comment, I would say anecdotally from clients is I would say those that do have an advisory board, especially established businesses, would be about 10 years ahead in their business growth and development than many of our clients that haven't done it.
Okay, fantastic. Gentlemen, if I can, there's a couple of questions coming through. Andy, I might put it to you. There's a couple of comments just in relation to shadow director, and how does someone going on a board or the business themselves avoid this shadow director issue? Yeah, can I pose that one to you if you don't mind?
Yeah, sure, Jason. It's a good question, and it's a genuine risk. So if you look at, I suppose, how do you manage it? Clearly defining your role that you play as part of that advisory board, making sure that you're not making decisions or giving instructions. You're facilitating discussion to lead to thought and options. So I think that's important. But clarifying the role and authority is really important. Understand the scope of what you're actually doing, and how that differentiates from formal directors that may sit on that board. Certainly avoiding providing instructions, but also managing self. So managing self in the participation of meetings. So what I mean by that is more observing, not necessarily, you know, deciding for others, withdrawing from decision making where you don't have experience or expertise or knowledge, but really provide solutions and options. And I think that you really need to make sure there's proper governance and communication in place. So, you know, are there records kept? Is there minutes of meetings? How do you manage that? When you get into a legal area, do you seek legal advice and counsel? All of those sorts of things are really going to help in terms of the risk management approach. And the other thing is, in some instances, and I've seen this, is an indemnity from the business to the advisor, that if for whatever reason a claim is made potentially against a person that participates in an advisory board, the business will indemnify them. for that sort of thing. So it's not an easy answer, and there's lots of moving parts, but it's all about managing risk.
Thanks, Andy. I think, that's, it's not one size. There's not just one answer to that. There's a combination of things, and every circumstance is different. So you really, anybody concerned about that issue, they really do need to get some good advice and some good direction on what they can do to protect themselves, but also the business as well. Pat, I might ask you this one if you don't mind. There's a couple of questions raised in relation to fee structure, and what does that normally look like for an advisory board?
Yeah, you see a range of models, and again, I think the point was made earlier. It depends on the scope of what you're doing, and Jason articulated this very eloquently. If you're only putting in an hour a month, then it's just going to be time costs, or if it's sometimes RSM partners will, as part of BD, will help growing businesses, and particularly in the very early stages. So the costs need not be significant. But if you're spending, for example, a day a month, I had one that I was on. I had to fly to Adelaide every month, and so they'd pay us properly. I think the fees back then, it was a few years back, but it was sort of $3,000 a month, and there were three of us on the board, so they were spending about $100,000 a year. But they were a much more established business. They're a national business, and there was a lot more to kind of work through. So I think you'll see all sorts of different models, and it's not that one's more right than the other. It's more a question of how much focus and specialised input do you want from your advisory board members. And the other point, Jason, I'd make is it's not just the meetings that you turn up for. It's the preparation, and often there's meetings outside of. So that's also going to determine the fee structure.
Sure. Thanks, Pat. Jason, I might, there's a question there. I might pose it to you, if I can. Again, along that mature business looking to transfer to the next generation. I'm interested in the role an advisory board could have in providing pathways for succession for long-serving board members who have or are about to retire. Also interested in recommended governance structure for such advisory boards. So I guess it's more around, the succession of the current board members.
Oh, so I mean, key to succession in any business is planning, so in a way you're recruiting, I suppose, Jace, and so allowing a transition of time. So to find someone, to bring them onto the board before the other person retires, and a transition of intel in a way. But I think it needs to be planned. Probably nothing further on out there, Jace.
Yeah, it does. It's a journey, not an event. I think it's important one there. Just also, Will, if I can come to you, mate. In your experience, a question's got raised. What's the normal board advisory tenure? How long do they normally stay for? I guess that's a very open question, but some insights on what you've observed.
Well, look, the successful ones, Jason, I see them go, like some of them been going for 20 years or more. So I think it, that's probably more a business that was already a sizable business is just continuing to grow, so that they haven't probably changed around with people going through the startup phase and so forth. Look, I think even Andy mentioned before too. You need to be there for at least 12 months to see something happening. Like it's not going to. People are not going to be able to have the influence and impact in a couple of meetings. So I think any really short tenures, like saying, you're on for a 12-month stint. I'm not sure that you're going to get the investment by the advisor. As Pat was saying, and I find this myself too, there's an enormous amount of prep work to come into those meetings. and you're trying to think about that business all the time in terms of thinking, what can I, is relevant if you see it to alert them to it and so forth. So I think if you want someone invested, I don't normally see tenures, I will say, Jason. Like I don't, often they're not done in that way. They're just simply appointed, and everyone knows if the owner wants to dissolve the board, they could do it instantaneously, So I suspect it's more about assembling the people. But it's not to say you can't have a tenure. It's just to say I think it's probably less common if you've got a group around, especially around a family business and an advisory board around that.
Thanks, Will. Appreciate that. One question I'm seeing here, and I might, Jason, I might even ask you if I can, is we've established an internal board comprising long-term key members, which meet quarterly. It's almost like a internal board, management board, where they discuss the big picture and the business direction. What are your thoughts? Would it be a good idea to bring in an external person to help this group?
So the value of someone external is just to provide different ideas and experiences. So a different voice, and the same composition. They're very familiar with one another. Yes, they might challenge one another, but often it can be the same message. So I think it's definitely worth trialling it, Jason. I mean, in our role, we run a business, right? We're dealing with all different facets: staff, IT, marketing. So, performance reviews, salary expectations, advertising. So our role in running our business gives us depth of knowledge to help provide support to existing businesses, whether we know that business intimately or not. And that's where there's value in having that external consultant, I think, Jace.
Yep. Thank you, Jason. Appreciate that. Andy, if I can ask you this one question, understand that each business will have different skill set needs. However, what's a typical advisory board skill set look like?
It depends. So I think, like all businesses, come back to expectations and what you want to get out of it. But it's normally a broad sort of skill set across different disciplines. So a lot of it's commercial. So a commercial focus doesn't mean you need to be an accountant or a lawyer or that sort of stuff, but have had commercial dealings and relevant experience with that. And when I say experience, lived experience, so we've done it, I think that brings lessons to the table as well. I think it probably goes back to the life cycle stage of the business, and what their sort of focus is on, and then trying to match up as best as possible. What are the skill sets that are going to add the most value to that business at that point of time? And it might be that will get them to the next stage, and then there might be getting somebody else in with a different set of skill sets. But I think broadly, a good commercial focus is really, really important. And also a strategic lens apart from operational and management type matters, but a strategic lens that's able to look forward and consider future state sort of scenarios and bring those sort of experiences and expertise to the table as well.
Thanks, Andy. Yeah, Pat, any thoughts? I see you nodding along there. Got some thoughts?
I do. I was just listening to Andy. I think Andy nailed it in terms of that's your starting point. The one other point I'd make to amplify that, we're in a different world now in terms of technology adoption, implementation, and that's carrying over to the business channels that businesses are using to enroll new business or clients. So I'm seeing a much heavier focus on the digital skills side, where businesses are heavily exposed. They're not old economy businesses, but they're trying to use digital channels, for example, to enroll clients or penetrate markets. So I think that's going to become an increasing area of focus without a doubt, and certainly is on a number of the boards or the engagements that we've got in that space.
Yeah, thanks, Pat. A bit of a lot of this is looking at it from the business's point of view. Will, I might ask you this one, if I can. On the other side, the actual business advisor themselves, what's in it for them? Why would they take on such a role?
Yeah. So, I mean, if we think about it, even from an RSM advisor's point of view, I mean, normally it is part of a broader engagement with the client, and so you are sort of engaged to provide those services and more. If it was some independent member, look, I think there needs to be some level of compensation. If there isn't, then I doubt you're going to attract the right people. That's not to say they're not voluntary work. Certainly, I've done it before, and I'm sure others in this panel have done pro bono voluntary sort of work in that space. But I think realistically, some level of compensation. Back to the question before around whether it should be equity compensation and so forth. I do see conflicts of interest in that, and I do think that is playing with fire. I know why people do it, but sometimes I get concerned they're attracting the wrong type of person that's in there for that. So I would be looking at the one thing I'd say too, though, on this, Jason, in terms of managing costs and everything. And because initially I will say that, very common it is that the initial couple of advisors that come on are typically someone with a real commercial, financial acumen, and then someone probably with even a legal acumen, that is to help them navigate all the compliance and regulatory and make sure they've got right contracts on board so that the business is actually worth something and so forth. Very commonly, you'll actually find that if you get those people together and pay them for an hour of putting their heads together with you as the owner, you'll actually come out that it doesn't cost you any more than running around all year trying to get different advisors and paying for the different advice as you go. So like I say, I actually find the biggest advantage for businesses, and the reason I say that I feel like they're moving, even a decade ahead of other businesses, is they stop making mistakes. They actually get in there, get people together, road test an idea with the right people in the room, make a decision, get out there and execute it. And that's how they keep leapfrogging other businesses. So I know I've moved off topic a little bit, but really I think it all does connect.
Yeah, no, thanks, Will. That's a really good one. Jason, just a question on the Q&A. So, how do you ensure that a board member doesn't just become a consultant around their specialist area? Boards, their skills more broadly. How do you keep them focused on the business versus the specific issues?
Yeah, that's a great question, and so that comes, I think, in part to the determination of who that's going to be. So, I don't go to my boards that I sit on with a tax hat on or an accounting hat on. I come as a business owner and a broader consultant. So, one of the examples that we had in a recent meeting was the success of a staff function, and I don't need any special skills to do that, but it was the first time this business had done something. They'd had a 35-year celebration, which was great. It was well received, and I was able to sort of share, within our business, without giving away IP, we have a staff celebration in Western Australia once every 12 months where we have 400 or 500 people in attendance. And so I don't think I need any specialist expertise. It's got nothing to do with being an accountant or a tax advisor, but I was able to contribute to that part of the business and decisions about whether they repeat that in the future.
Yeah, fantastic.
So you've got to come with an open mind, I suppose, Jace, in answering that question.
Yeah, and I think too, being and from the business's point of view, making sure the ground rules up front in terms of being able to have a relationship where you can have open and honest conversations, so that if we're not getting what we need out of the board member, then we can have that discussion and move forward. Either change what's happening, or ultimately we might need to find somebody else. I think communication is a big one.
Jason, I might just jump in there too.
Sure, Will.
So I totally agree with what's been said, but I'll just add to it that sometimes the advisory board you're assembling for a period of time might be project specific, and that's actually what you're trying to do, is actually find people with skills to take you through a particular phase. So I don't think it's always a problem to have someone who's in there using their specialist skills. And in fact, as you navigate a particular matter that might be there, because some people extend the advisory board concept that we've talked about here, which is very much around helping business owners more generally and make good decisions, think strategically and so forth. Some people do just pick an advisory board for a project and operate that for, say, 2 years to actually guide them through either a big succession issue or something like that. Now, you would want, if you're going to have that, you would want a lawyer that understands succession on the advisory board. So I think, so I'd say it does depend on the circumstance.
Yep. No, very, very correct. Pat, if you don't mind, I'll put this one to you. Where do you start to look? Where do you start to look for these potential board members?
Yeah, that question comes up a lot. I might start by cautioning against the golf club mentality, and what I mean by that is, and I don't mean it in an entirely derogatory sense, but whether it's the golf club or cycling or people that you socialise with, often people attract like people, so they'll have people in their network that own businesses, and they'll say, I've worked with Joe Smith, and he's an M&A guy or he's a corporate lawyer, and he did a great job. And sometimes those referrals can work really well, but sometimes they end up in a vastly different place, and it could be due to chemistry of the parties involved. It could be that Joe Smith was involved in tier 1 construction, and tier 3 construction's a vastly different proposition, and the skill sets required are different. So I think guard against just taking recommendations and without doing the due diligence or investigating whether the parties you're talking to are the right fit. You can do the obvious thing. You can talk to your accountants or your lawyers or your business advisors, and sometimes there'll be people within that network that come through. But I'd encourage people to look far and wide, particularly if the requirements are much more complex and the business is much bigger. I think the point been really well made today that the people you start with are not necessarily all the ones that you're going to go right through the journey with for various reasons. So keep an open mind, do the due diligence, and finally, there are established people in the market. If you're looking to really build out a deep depth of experience, there are people that will go and do like they do for senior execs. They'll do search exercises once you identify the scope of what you need and type of person you're looking for.
Thanks, Pat. And I think, for people, starting out on this journey, certainly your business advisor, your trusted business advisor is a great place to start. Andy, if I can throw this one to you, should a charter be set up for an advisory board at the start to ensure that you stay on task?
It's a good question, Jace. I think it's essential for governance. It makes sure that the advisory board is clear on what it does do and what it doesn't do. So what I mean by that, it doesn't swim into a committee of management and other areas which it probably shouldn't sort of focus on. So I think a charter is really important. It outlines obviously the purpose, the structure, the operational guidelines, the game rules, if you like, of play of the advisory board. And it provides everybody with clarity around what their roles are, helps to manage the dynamics of people within the advisory board group. So I think it is essential. And even for smaller businesses, I still recommend that some form of advisory board charter be put in place, particularly with the governance aspect, because it's dangerous territory if that's not clear for individuals. And we've spoken about shadow directors and things like that. So yeah, on my list, a charter is really important.
Okay. I guess as we sort of get towards the end of this session and start to wrap it up, I think we've been through a lot of the questions that have been raised and touched on a lot of the themes that have been raised. As we sort of wrap this up, last thoughts on this, if I can start with you, Will. People going away from this webinar? What would you leave them with?
Yeah, I'd mention again what I mentioned before, that you don't have to do this alone, and certainly the benefits of an advisory board, if you see it rather than as a cost but as an investment, and you aim to get a return on that investment, I think you'll be handsomely rewarded for that investment. And realistically, also, most businesses out there, they're all in the formation stage of advisory boards. There's some that have been out there for a long time, so you're not the only person trying to set up an advisory board. So I think regardless of where the stage your business is at, I think there's benefits to be gained if you were to look at it.
And Andy, your parting words of wisdom?
Yeah, look, I think particularly for businesses, high growth businesses in particular, where the risk profile increases, advisory boards present a real clear opportunity to manage the risk of decision making, but also I think just bring complementary skills, expertise, experience to the table to provide value. And that's what it's really about. If it doesn't provide value, why are you doing it? So that's probably the key sort of focus that I look at with an advisory board.
Yep. Thank you. Jason, if I can, your final words?
Yeah, it's about existing businesses and business owners trying to be better and just considering whether or not an advisory board can help. The board's not for everyone, but if you've got an open mind, you're looking to grow and you're looking for support, then I think that's where the advisory board fits in.
And finally to you, Pat, final words.
Yeah, look, I won't reiterate the points that have been very well made, but I might take a slightly different approach. I think even in private markets, there's a lot of businesses raising capital, more than I've ever seen before. And sometimes there's an implicit assumption when you're raising capital, and let's say it's from professional venture capitalists or private equity groups, that they will bring skills similar to what you get in an advisory board, and they'll be strategic and so on, and that will come because of alignment in your shareholding. But what we found is that that's not always the case. In fact, more often than not, professional investors have got a large portfolio to manage, so they don't often have the time to give that sort of input. So I think, a well-constructed advisory board can still sit really nicely in those sorts of situations as well, for all the reasons that have been articulated already.
Yeah. Thank you, Pat. I think, thank you, gentlemen, for your time, and really appreciate the questions that came through from the audience as well. It really did enable us to expand on a lot of the things that we wanted to present and discuss with you all. So, we found that really stimulating. Please, if you haven't read the latest Think Big, you can download it at on our website at RSM Australia, and encourage you to do so. The other thing I'd encourage you to do is to really have a look at the case studies. I think what our marketing team, who did a fantastic job with the report, pulling it all together, was look at businesses at very different stages in their life cycle. The startup, those going through the growth phase, and then finally to the case study of the business that been around for 35 years, second generation, and moving, and how they work through those issues with an independent board member. I think, looking at those case studies, I think there will be something for everybody out there in small and medium enterprises who will be able to take something away from that, I'm sure. And if you have any questions, please reach out to your nearest RSM advisor. We're more than happy to talk, and any follow-up questions or comments, always free to put them forward, and we'll certainly take them on board. Thank you all very much for your time, and hope everybody has a great day. Thank you.